Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 307 for August 2nd, 2021. We are recording this at 1 p.m. Eastern Time. My name is David Kosmeter. I'm the creator of TimingResearch.com. And today I have arranged for John Nyaradi to join us of TradingGods.net. And you should be seeing his screen right now. And also the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, welcome everybody and welcome back, John. We're going to have a great show today. Market open very, very strong, kind of into the fade mode a bit now. Let's go through a bunch of information here and see what we can do. Before we get started, John, a little quick background on yourself and Trading Gods, and we'll get right into it.
Thanks, Jim. Always a pleasure to be with both of you gentlemen. It's always fun, and we learn a lot and cover a lot of ground, and exciting times for sure. So Trading Gods is about options buying and selling, and that's our main focus these days. I've been a professional trader since about I started actually learning in around 2000 after the tech wreck. I was doing the standard 60-40 cash bond stock thing, and instantly my net worth we got cut in half. 401k went to 201k, so I figured, well, maybe there's a better way to do this, and so I've been trading since then. Was doing ETFs for quite some time, and then I've been doing this options program the last 6 years or so. I've been published all over the internet. I had a column at MarketWatch, a column at USA Today, Yahoo, a bunch of articles, and I wrote a book called Super Sectors that's published by John Wiley and Sons. So it's been a great experience. I'm learning all the time, and as long as you keep learning, you get better. And this is a craft. It's like you don't start out playing at Yankee Stadium, and so we all have to learn and keep growing every day. And we're here with, of course, a longtime expert and the option professor. So looking forward to our conversation today.
Sure. All right. Well, let's get through some of the, shall we say, compulsory things that we go over every Monday. And the first one is where do you think the S&P will close from today's opening to Friday's close? And we'll give you an accurate on the SP. We'll use SPX as a model here. And it opened today at 4406. So between now and Friday, what's 4406 going to do, up or down? Down's got a 7-point head start, but what do you think?
Yeah, I would say it'll be higher by Friday.
Yeah.
And let me put this PX in here on this little chart here just to look at on the trading grid. So let's see, Friday would be the 6th, right? So
right.
Yeah. So I'd say up sounds like a good possibility to me.
And what are some of the things you think might occur to make it go up further?
Well, yeah, I'm a technician, and so I'm just looking at this chart here, and this is a very bullishly configured chart. We have the moving averages, and you don't have to make this complicated. I think if you can't explain this to a 5th grader, then your system's too complicated. So it's pretty much a no-brainer here. So the price today is above the the exponential moving average 8-day, 21-day, and 50-day. They're all stacked in order. That's a nice looking chart. We have green candlesticks, and then those little triangles, the pink triangles up on top and the blue triangles on the bottom. That's the ATR trailing stop. You can see it just switched from pink to blue, so that would be a bullish indicator as well. So, and then the final thing is, just made a high 3 bars ago, the 44.29, and usually when that happens, and Jim, you can talk about this as well. If you make a new high, and typically that's followed with a little retracement like we're seeing here, followed by another new high within the next 5 to 10 days, let's say.
With regards to, I was looking at a 5-day graph on the S&P SPX, and I saw that we gapped down on Friday, leaving a gap between about 44.10 and 44.20. Today, we went up and filled the gap and turned down.
Mm-hmm.
Do you show a gap there? Because not all the charts show a gap, but the one I'm looking at bigcharts.com shows a clear gap on Friday when it went from 44.20 down to, well, it actually gapped all the way down to like 44.05. Then it bounced
Yeah.
back up, but it still left a gap, which got filled today.
Right.
And do you
Yeah,
find
no,
it interesting at all that we filled the gap and have rolled over a bit, or do you think that's insignificant, or what do you think?
Yeah, I think, of course, the 8-day is, we're sticking right here on that one. So I think that, no, I think we're okay. I mean, in terms of a stronger week ahead of here. I tell you, and then if you look at the background noise, earnings have been good.
Oh, yeah.
The virus, nobody seems to be worried about. In fact, if that thing reoccurs, the feds are going to keep doing their thing,
Right.
So I think that right now this is looking pretty benign and plenty of room to move towards that upper Bollinger Band.
Your other indicators underneath, standard deviation looks like in an oscillator. Are any of them having to do with RSI or anything like that?
The DMI is similar to RSI. This was invented by Wells Wilder. That guy was a genius. I think I never met him, but he did RSI itself actually. And so it's it tracks the direction and momentum of price movement. So you can see like back here on 621, the bars started getting bigger and bigger in green, and that correlates to these prices going up. And then had the downturn, and now it's back up. So you can see we're kind of just chopping along here, but green and with this little blue line moving up, the moving average line moving higher. So similar to RSI, I can put an RSI on here if you want to. I think I've got one. That would be easy to find.
Yeah, because like I said, the market obviously is strong, and obviously earnings are going to be great because you're comparing them against a shutdown period.
Right.
But I was wondering if some things like the RSI might be indicating a divergence, meaning we're making
Yeah.
new highs up here, but what's the RSI saying?
Let me pull up the RSI. We'll take a look at it here.
Because as you saw with Amazon, if they change the
Right.
music, sometimes it changes fast.
Yep. So here's the RSI down there, the bottom panel. So yeah, it's kind of a benign mode as well, just tracking along there sideways. So I don't know. What do you see on this?
Well, I just, like I say, I was saying we had a high point. We had a high point on the SPX come in at in July, early, and it was at 4,400.
Right.
And then we go and make a new high here at 4,430.
Right.
Now, is that new high above the early July high being confirmed with the RSI, or is it dragged a bit?
So you're talking about here and then 4,400.
The former high was 4,400. Wouldn't that be over a
Yeah.
little further, like 712?
Okay, I'll come back here. Here you go. Yeah, so right about in here. Yeah, so it was reaching close to 70 at that point. Came back down. Yeah, so I think this is looking pretty peaceful here, and of course then you have this seasonality. It's August, everybody's on vacation.
Yeah.
Waiting on the Fed meeting at the end of the month in Jackson Hole. So I would look for higher between now and the end of the week.
Yeah, it looks good. It's just you always are trying to keep your eyes open for warning signals. You know what I mean?
Absolutely.
Especially when clearly we've got a pretty long group of people out there.
Yeah. We've talked about that on previous shows. The overbought nature of things. The Buffett indicator and the Cape Filler and all those things.
Yeah, but like I say, they have meant nothing because of the
Nothing.
interest rates
No.
being so low.
That's it. That's
When
the name of the
interest
game.
rates are this low.
Yeah, it's all about the interest rates, isn't it? And I think an interesting thing, and this I was just reading about over the weekend. We're again not to do with technical stuff so much, but we're coming up on sort of a cliff here. The eviction moratorium has been stopped, and then the stimmy checks, unemployment things are stopping now. So that's all coming, in September. So that's going to be an interesting change of weather, perhaps as well. You see what kind of impact that might have.
Right. All right. Let's go around the horn here on some of the other things, and we get over to the stuff you're working with the indexes. How does the NASDAQ look like QQQ?
Yeah, let me pull it right up here. I like the Qs. I follow them closely. I found that the cash NASDAQ, the NDX, it's interesting. It doesn't really have the volume. Like the SPX has great volume,
Yeah.
And
Well,
but
Qs
the
have plenty of volume, 16
the
million, and
Qs,
it's only whatever it is. Yeah.
yeah, the Qs are way better for people like us, retail traders. So not as strong here. If you look at this, a lot flatter, just coming, maybe
Yeah.
trying to creep up into the green line. Much more flatlined here. Still bullish, but
We took
certainly
out
not.
if we take out 360, does it look like it's rolling over a bit?
Yep. Yeah, and certainly, yeah, that 360 would be, this is the the 21-day moving average. That would be certainly a line in the sand. And then if you look at the ATR stop 354, that would be a significant, if it drops below that 354, 355, that would be a significant red flag. So I think the NASDAQ obviously is not looking as strong because there was some mixed action in the big tech last week, and then we can look at those charts in detail later on here as we go through this. But
Well, the three major ones would be Facebook, Amazon, and Google.
right, and then we can run through those. So I would say NASDAQ higher by the end of the week, but with not as much conviction. You can see
Right.
at the the red bar here, and very
Right.
much it's got to stop here at the 21, and certainly no later than this 354 or 325.
You want to look at some individuals? Google,
Yeah,
Amazon.
let's run
Yeah.
through this. We could just, you want to do the fangs? We could just take a look
Yeah.
at each one of those, and so we'll start with Facebook. So I really think, and I think this is not a news flash. The fangs and plus Microsoft and Tesla have been driving this market for a long time, and so here you can see right on the 21-day average, the 8 is kind of rolling over. It came off the upper Bollinger Band. So if it stops here, this is a run of the mill reversion to mean, and we should see it going back up. If it drops down through here, then again, that would be a more of a red flag with 340 at the bottom there. You can see how the RSI has come down off of 70. So right now, this looks like just a normal reversion to mean with an opportunity to go higher. So that would be Facebook. Let's do Apple next. So Apple, similar picture to the Qs, flat, not as strong, not as much conviction. And you can see down here still really not even on a buy signal yet on the DMI. So this would be a great well, and you should chime in on this one as well, Jim, in terms of maybe an iron condor for a short term, iron condor trade. It could be good. It's going flat and you have plenty of room on both sides. You can see how the Bollinger Bands are narrowing out. So a little time of sideways consolidation and then another move higher or lower, What do you think?
Yeah. Well, it looks like those parameters are about 150 and maybe 135.
Right. So that
And
could be a good short-term iron condor, I think,
yeah.
and so that would be Apple. So, it's interesting because they weren't as strong as I think I expected, and even though their earnings were good, So Amazon was the one that had the wipeout here. So you can see it had this huge 7% drop. Was that on Thursday, I guess, after earnings? Went into a very bearish configuration, down to oversold on the RSI. But now the price is below all three moving averages. They're all pointed down. It dropped through the the ATR stops. So this is a very bearish picture here for Amazon. I didn't read what happened to their earnings. Did you? Did you read why this happened or what happened? I
Well,
wasn't
they're
following.
saying things are going to slow down. And as soon as anyone hears the word slow down, they want out.
Yeah, yeah,
That's what Facebook got hit by as well. But Amazon got hit even worse.
yeah. I mean this, and that's those earning trades. We could talk about trading options around earnings. I usually my strategy tends to be, ahead of earnings. Volatility tends to increase, so you can you can be, buy going in, the prices go up, and then after earnings, there tends to be that volatility crush, and you can talk more about that. You're an expert at that, and so I think this is a
Well,
pretty clear
clearly, if you were
example of
doing anything
that.
with Amazon, you'd look at the out of the money puts if you love the stock, and you'd start rating the hell out of them because
Yep,
obviously
yep,
the implied volatility had to go through the roof. And
yeah,
now this is again another caveat emptor about put writing. It can look very, very easy, and it can look very, very good for a long period of time, but it doesn't take much of anything to get nailed very hard on it. I'm just think of how many people were writing puts on Amazon under 3,600 when it was up at 3,700.
yep, yeah,
And
exactly.
if you're selling a 3,400 with a 3,700 with 2 months to go, you probably thought you were in the easy street, and the next thing you know, you're in the soup.
Exactly, and if we look
So,
on the weekly here,
but if it starts
uh,
deteriorating, you're allowed to get out. You know what I mean? These are
yeah,
tradable options. So, if you are selling options and you start seeing deterioration, it's
yeah,
not illegal to cut and run.
right. Weekly still looking okay again. It's kind of hanging here right on the edge.
Yeah,
And
I
so we,
saw some support around 3,300 on my longer term graphs, 10 and 20 years out.
yeah, yeah,
And so I don't think it's coincidental it bounced off 3,300. I think that's not a bad
right.
piece of area of support right now.
And then Netflix. So Netflix again, a little bit on the bear side here. It's
Mhm.
below all the averages. It's got a red bar in the DMI, and it's interesting that they've been one of the COVID trades, right, for a long time. Had this high back here, and now it's been sort of drifting sideways to downward. So
Mhm.
Netflix would certainly be, depending what your outlook is, see what the week is here. Weekly, it looks like. So again, just hanging on here. So Netflix is just sort of drifting, I would say. And I didn't read about their earnings yet. I try not to read that stuff too much because it kind of fogs my brain. But what was Netflix earnings about?
I think it was decent. Again, I don't think they're growing their subscriber base quite as much as they used to because of all the different competition and streaming.
Mm-hmm.
And they probably haven't had as much production costs as they used to have because, of the COVID stuff, but I'm sure that's going to start picking up.
Right.
But,
Right.
competition, they've got a lot of eyeballs, so they certainly have got a lot to monetize. So people do still like the stock quite a bit. Speaking of when things happen, what to look for, when I see Square at 111 P ratio based on its next year earnings, and I
Mm-hmm.
see it jump up 40, 30, $40, and if I owned it, I would be looking at the calls, and I'd be looking for some covered call opportunities up here because,
Yeah.
this is
Well,
a very big move. And they just spent a lot of money with this company uh, that is supposed to do, financing for pay later.
right.
And, there's a lot of enthusiasm today. So obviously the prices are very, very high. Sometimes after enthusiasm comes a little bit of reassessment.
Right.
And, it did hit a high today. It's right on the high pretty much, I think. The all-time high is 283. So it looks like it's going to take
Mhm.
a shot at that. But, you got a very high volume day, 30 million shares traded on Square. And the normal volume is 7 million. So you've got a huge move and you got huge volume. And I always say to myself, if there's 30 million volume and the prices are up $30, who's selling? and who's getting the better deal, you know?
Right, right, right.
So, you know, this is how you have to have your mind thinking sometimes, is in that, you know, this is a great news for Square. This is a great price action, but you've got tremendous volume coming in.
Right.
And there was 8% of the stock was short. So you're going to have some of the short covering going on. And what's going to happen after the dust settles is the news going to shift over to, well, these guys don't know that much about each other and they're going to have a year of growing pains, which is what one guy who's in that business was saying on the TV. And so they have a year of trying to get used to each other. And how fast is this renaissance of pay later going to work? Because essentially, I think what it is they're trying to go after the credit card business by making it not high interest, making the terms of repayment a little bit better,
Right.
and that
Right.
type of thing. So, you know, there's obviously a market there because these credit cards are, you know, high interest ways of getting money. So if there was a way to replace that, there'd be a market for it, I would imagine.
Yeah, this looks strong on the weekly as well. So I think
Mhm.
this is obviously a bullish,
Yeah.
bullish place to
But,
be.
you know, at 101 P ratio, PayPal
Right.
is at 50 PE. So it's over twice the valuation of PayPal.
Let's see what PayPal looks like just as a comparison. So she mentioned it. See if I can find it here. It's what PYPL, I think, right?
PYPL, yeah.
Yeah, so PayPal is totally different picture here. New low here, recent low today. Yeah. I mean, look at from 310 down here to 273. That's a huge move in just a few days.
Yeah, I think this is a product of 50 to 1 P ratio.
Yep.
You know, sometimes stocks will fall because people just get tired of paying the premium.
Right. That's interesting.
Yeah, there's a couple of, well, let's look at the rest of the stock index. So let's go to the Russell IWM. This one to me seems like it has to get above 225 if it's got any big upside.
Yeah, this has been solidly bearish. And of course, that's a red flag in itself, you know, the divergence between the S&P and the Qs and the Russell, you know.
These are small caps. Yeah.
Yeah. And I think, you know, the small caps are sensitive, kind of leading edge kind of thing. So this would be certainly something to pay attention to. I think that kind of divergence between.
Well, listen, if we're going to have a big recovery with the comeback to the reopening, and if the energy sector, which is a lot of that in there, is going to make a move, and this thing takes out 225, then I think that's a train you might want to get on. But that's a lot of ifs.
Yeah, you can see how it was tracking here on the weekly for quite some time with the rest of the indexes, and then kind of turned south here in May.
Well, it does have some energy in there, and energy went south.
Yeah.
The price of oil didn't, but the energy shares did.
Right, right. So
yeah, so that's an awful lot of red. You'd want to see a little green before you get too excited. You don't want to be the first guy at the party. It'd be pretty slow, right?
That's right.
Let's go to the transports because again, they peaked out in May. IYT, yeah.
Yeah, same looking picture. And again, another red flag, you know, because I mean, going way back to Charles Dow, the Dow theory, you know, he was transports have changed a lot since his day, of course, but he wanted to see those two confirming each other. So, and of course, a lot of people, Jim, as you know, will say, well, these are going to have to match up one way, somehow, or you know, sometime, some way. The S&P and the Dow are going to have to either catch down to the transports, or the transports are going to have to catch up.
Well, this is what has me looking for a warning sign because you know, it's been June, July, August now that we haven't seen new highs in the transports. And I think it's been a while since we saw new highs in the Russell. So how far are we going to go without the transports and the Russell is the big question. And are these guys leading us to where the other indexes are going? And that's the question, right?
Right. Yeah. And that divergence, of course, I would agree completely with that. They're going to match up either up or down. And so, and like we've been talking, I think, and looking ahead and, you know, September, October, that's the question. Which one is going to lead the way? Are transports leading here or is the S&P?
it would be worthwhile maybe to just let the tape tell you, get above 4430 on the S&P, get above
Right.
225 on the transports, I mean, on the Russell, maybe 260 something on the transports, and then you're on a train that has some rails that look like they're going north.
Yeah, and I think this confirms, you just have to believe what you see, right? You can't believe what you feel. And
Yeah.
so this would say that this is a fragile market. I mean, I just said a few minutes ago, I expect the S&P to be higher by Friday, but I don't know about September,
Yeah. The closer we
October.
get to September,
Yeah,
October, but then
yeah,
you start saying to yourself, if it is going to be weak in September and October, is there any money that's going to front run that?
right. Yeah, I don't
Because,
know.
if a lightning storm's coming, you might batten down your hatches a little bit earlier than when it shows up, right?
Right. Have you ever
But
looked at the Ichimoku cloud? It's really a fun indicator.
yeah, it reminds me a little bit of Bollinger Bands, doesn't it, a little bit?
Yeah, yeah. So on the IYT, it's obviously forecasting lower ahead for the IYT, no doubt here. And if we go to, let's look at SPX. It's the only indicator I found that will look ahead, so to speak. So it's looking ahead out to early September, still being green up. So at least to early September, the Ichimoku is confident that.
Why are
prices
these numbers lower than where we're trading though? They got a
Yeah.
42.45 and a 43.62 on the side there. Why are those
Yeah.
numbers lower than the 4,400 or whatever?
Yeah, these are the
Support?
we have to get in to talk about all the bands, but
Okay. Okay.
it's a complicated topic, and actually it's so this would be the cloud itself. So when the price is above the cloud, you're generally bullish. When the
Oh,
cloud
okay.
is
That's
green,
so
you're
it's
bullish.
essentially the cloud is a support.
Right,
Gotcha.
exactly.
And so this would be basically saying that as long as we're above 43.62 and 42.45, that the possibility of going down to 4,100 or 4,000 is off the table.
Yes, exactly. So the bearish or the bottom of this cloud, like you said, 42.45 would be the bottom of that support. But you can see our prices back here, and Ichimoku tests or it claims that it can look ahead, and so it's looking ahead out to at least September 6th here, saying that things are looking okay.
All right, a couple of areas that I think there could be some potential in, but I need a little bit more price confirmation is industrial metals and in the oil and energy area, because crude's still up in the 70s, yet these oil shares are still discounted from where they were. But let's start out with the industrial metals and start out with Cleveland Cliffs, CLF. There's just three of them that I look at.
Sure.
These are things that have not happened already. Sometimes it's good to have a little money in some things that haven't happened already.
Yeah, so they're starting to, this is going up. It's had this little swoosh down here and then back up again a few days ago, July 28th.
So it's looking promising, eh?
Yeah, I think so. Yeah, definitely.
How about Xerox? Steel X. This one looked pretty good as far as the get out point was pretty close to the entry here. X.
Okay, just a second here. I lost what we're doing here. Sorry.
X marks the spot.
There we go. Okay, so Cleveland Cliffs. After that was
Steel.
S.
X.
X.
U.S. Steel, man, been around forever. Bridges and roads and tunnels and everything else, right? Infrastructure.
Yeah, looking solid there.
Yeah. And then the last one is Freeport McMoran. FCX.
FCX. All right. Same. Looks the same as the previous one.
Yeah. So industrial metals look like they're starting to pick up some steam.
Yep. Yeah, looking good.
Let's go look at the energy. XLE we'll start out with.
Sure. Yeah, looking real weak here. Have been for quite some time. Huh?
Yeah, but if we could get above the 52 area, it would change the tune. But if and when it's not an investment strategy.
Yeah, and you're looking here at this 52 with the ATR stop. So above that would be a bullish signal.
Yeah.
I would agree with that. Yeah.
And what about some of the exploration guys like Halliburton, HAL?
Yeah,
Yeah,
look
they're all the
there.
same story. Yeah.
Yeah, same story there for sure.
Yeah. They're kind of in waiting. If they start popping, I think it'd be a train to look at, but you don't want to be the first guy on the train.
Right.
Yeah.
So let's see. Let's go back to the FANGs. We were at Netflix, Google.
Mm-hmm.
So Google is a perennial favorite, right? Those still overbought, just going vertical here pretty much.
Yeah.
Upper Bollinger Band. It seemed to do well on its earnings, right? And then I like looking at Tesla because it's always interesting. And if you look at Tesla, so that's on a buy here, a new buy as of just a couple of days ago. And so I think it's been in the kind of the doldrums here for quite some time. And now it looks like it's heading in a more upwardly direction. Let me get a longer picture of the daily here. So you can see how Tesla's been just kind of flatlining here, going way back into the spring,
Would there's a couple of ARK funds that might be worthwhile taking a look at, ARKK and ARKF, because fintech is what this Square deal is all about. So this one here would get you the Tesla and a bunch of other ones like Roku, etc. And it looked to me like it's trying to get going. What do you think? Maybe a little bit higher it needs to go and then jump on?
Yeah, let me zoom in here just a little bit. Yeah, I wouldn't be ready to buy this one yet. Just looking at the reds down here, and it's just starting to move up. Yeah, it's got some ways to go. And the 125, 129 level, it's got a little bit to wait. We're still just tracking sideways here with the red.
Yeah. Another one of those deals where it'd be better to wait for a little strength and jump on. How about the ARKF, which is the fintech?
ARKF.
And again, that's what this Square and this other outfit is trying to merge.
Yeah, same thing. I think starting to head north here, but it's got some ways to go.
Yeah. I only got two other ones I was going to ask you about. One is GBTC, which is your Bitcoin proxy, because my feeling has been the lows are in on that stuff, and they've got a big bright future here.
Yeah, I do too. I mean, I think
25 is all you're going to write on the downside, I thought.
It just popped here. Yeah, Bitcoin is moving back up again. If you look at, a corollary to that is coin, the Coinbase. It'll track Bitcoin pretty much exactly. So, it's these are all heading back up, I think.
How about Ethereum, ETHE? That even looks stronger than Bitcoin.
ETHE.
Yeah.
Yeah, super strong.
Yeah.
So I think
it looks like those lows look like they're in.
I think so. Yeah, absolutely. My view, this is the gold. Gold is out, and these guys are the new gold. I mean, there's just no doubt about this, and you can just see it's getting more and more mainstream. And I mean, there'll be some big shakeouts. I don't know who's going to be the survivor or the winner. But it's a genius idea. You create a currency that has a limited amount of product, so you built in automatic supply and demand.
This guy says it's a non-sovereign store of wealth. That's what it is.
Yeah, that's what it, if you look back in history, dollars used to be backed by gold, and there was a finite amount of gold. And so Nixon changed that picture way back in the early 70s. And so, but now these guys, all these coins have really done the same thing electronically. It's fascinating,
Yeah. With regards to the stuff that you're trying to work with, Are you doing the credit spreads generally on the index only, or do you look for individual stocks, or what do you think?
Yeah, we do both. So our main strategy is we do directional trading,
Right?
and those are mostly vertical debit spreads. I think that's the way to go. And so we can look at some we're looking at this week in that area. So we're looking at, as I mentioned, Tesla. I think Tesla would be a good place to enter here on a vertical debit, directional type of trade. And then I think that and so in your training, do you teach all the different? I mean, they're
Well, I've been doing
different.
I've been doing the seminars and stuff for decades, so I'm familiar with all the strategies.
Oh, I
And
know you are. Yeah. Which
yeah.
ones are your favorite? Which ones do you like? What?
Well, I always what I do is I look at the circumstances and then I go into the toolbox and get the one that has the best probability for what I'm trying to achieve. So
Yeah.
I'm
Yeah.
not tethered. I don't tether myself to one tactic. One of the beauty of product knowledge is that you can go with whatever the setup looks like. So
Right.
if you're thinking something's rising, obviously the calls and then the credit put spreads, and maybe you would do even a ratio deal where you'll sell some extra puts and buy calls with it or something. I like to do stuff where you get something else to pay for your situation if you can,
Yeah.
and
Right. Exactly.
that
That's
kind
so
of stuff.
important. I think just to buy a call by itself is not a good idea. And you see people doing that all the time, especially the out of the money calls. That's really just a lottery ticket, right?
Yeah.
And
And sometimes, like I say, if you can build a case for a lottery ticket, then it might make some sense. But if that doesn't happen, the money goes away. But like say you're looking at a company like Viacom,
mhm.
and you're looking at, like, let's put up the chart and I'll just give you an example of what I'm talking about here a little bit.
What is it?
VIAC.
Okay.
Now this thing has been flatlining
Yep.
around $40.
Yep.
And there's a huge gap on the chart up at between 85 and 90.
Mm-hmm.
And I don't know if that'll ever get filled. But if it got bought out, it could get filled. And so if you looked at call options, and this is where I would, this is a rank speculation, but it's a rank speculation that could make some sense if you what do you call it? If you got the volatility. So say you thought for some reason that in the next year we could get a run up in this stock,
Mm-hmm.
and say you think the run up could be very, very high.
Mm-hmm.
Just looking out to September of 2022, about a year out, say you had a target price of 65 on that thing. And you said you wanted to maybe, spread something like the 40 calls against the 65 calls.
Right.
And in that case, using round numbers, you might have to put up about $6.50 or something like that. And you'd have a potential of $25. And you'd have until a year from now to see it materialize. Now, this doesn't interest me as much because I thought these premiums would be way lower.
Mm-hmm.
And
the volatility is higher than I expected. The implied volatility there in the 40s and 50s.
So this is not a great example. A better example would have been, like, I'll give you, for instance, when Freeport McMoran dropped under $10 a share. And they deal in copper, and the world will continue, and that building will continue, and at some point there'll be a pinch on these people again. So you go out and you go and look at an out of the money call at, say, $15, and you go a year or two out. That's when taking an out of the money option as a speculation would make some sense, because you're making first of all, you're buying something that has been discounted, that is a tangible asset where there'll be demand. Copper's not going out of business. And so you say to yourself, okay, I'm going to go way out in time. I'm going to buy an option that only goes for a couple of bucks. And then if we swing back like we just did to 30 or 40, that option can go to 15 or 20 bucks, and I'm only putting up 1 or 2. That's when the out of the money option makes sense to me.
Right.
Is if you can build a scenario why a turn could happen and why you're getting it at a very discounted price and why there makes, and then of course I look at things like Carl Icahn's involved in the stock and other people like that. You see what I'm trying to say?
Sure.
So,
I
you know,
do.
you got to say to yourself, you know, when Carl Icahn's buying into this thing and it's $8 and $10 and all this stuff, is he a moron? Has he done any research? Is he trying to lose money? You know, and then you look at the idea of, well, what kind of company is this? You know, so you go through a checklist, and then it's like you go into court and you're going to say, what's the preponderance of the evidence? And if you were the judge, you know, what would be your verdict? You know what I mean?
Right. Exactly.
And I think that's one way that you kind of check down on a trade. That's why, like I say, when I see the big move on Square,
Right.
you know, I'm thinking, what are the calls going for?
Right.
You know, 30 million geniuses showed up today and decided to buy Square. You know, the 30 million Phi Beta Kappas want to pay $30 more than it did the other day.
Right. Exactly.
So, you know,
What
can
else
you
do I
put
look at?
can you put the Square calls up? Let's just see what
Yeah.
they look like
Yeah, let's look at
for
it. Sure,
folly,
let's see.
for folly here.
Yeah.
You know?
Yeah. So how far out do you want to go here?
Let's go 6 months out.
Okay. So let's say December.
Yeah, go to December. That's they should be pretty fat by there. If they're not fat, that you know, that might tell you something too.
Yeah. So implied volatility is in the 40s, right?
And what are the calls going for? Like at 300?
All right. So 300 is 1990. Just so.
So $20, they're giving you $20
Yeah.
on a 300.
Yeah.
Yeah. So that means if you own the stock here at 270, whatever it's at, you're agreeing to sell it for 300 plus the 320.
Right.
So you're going to be, you limit your upside by another $45 or something like that.
Yeah.
And
So you can drive the price down if you do the 320. So yeah. So your max loss 57.80, max profit 14,000, buying power effect 5,700. That's like a 3-to-1 almost.
Just like what are the puts going for on Amazon at say 3,000? Now, this is the idea you already own the stock. We're not talking about naked here.
Right. Right.
Or you have the cash to buy the stock. But these have got to be, these got to be pretty fat, don't they?
Yeah, so 88,000 for 10 of them, $8, 800.
That's at 3,000.
Yeah.
For how long? Till December?
Yeah, that was December 17th.
Yeah. So you'd get it for $8 under 3,000 if they put it to you, or you keep the $8.
Yeah.
And then sometimes, you know, if you're willing to buy the stock at 3,000, you got $8. You take the $8 and you throw it into some calls.
Yeah. You ever use this probability out of the money much? The POP, the deltas.
Yeah, what do we got? 93% chance it works out.
Yeah. Yeah. On the
I like that.
3,000. Yeah. Yeah.
Yeah. And what about on the call side? Say you went with a nearby call of say September, because let's say they're going to rally it for some reason this month.
All right. So let's say the September monthly.
Because you saw how oversold it is. It could pop to 3,500. So let's say you bought a 3,500 call here for a month or two out.
500. It's 76% chance of being out of the money and $4.
$4. How about if you go down to 3,400?
34 is 7. Yeah. So again, these volatilities aren't as high as I would have expected over here on the calls.
They're pretty low, right?
Yeah, really low. Yeah.
Yeah. So that, that's the kind of play that I would, have an interest in, something, picking up a stock like Amazon, another 10% lower, that'd be like 25% under its high.
Right.
And,
Well, that's
and then
exactly.
basically rather than holding on to $8, throw your $8 into a rebound rally possibility.
Yeah. That's what they say, right? You want to buy when the volatility is low and sell when it's high, right?
Yeah, you want to take advantage of whatever's out there. You know what I mean? And sometimes there's nothing to take advantage of. But when you get a big stretch move like you got in the two stocks we just mentioned,
Mhm.
that's when the other side of the trade is going to have some pretty decent prices.
Exactly.
But yeah, you just have to use your common sense. How many people were short calls on or short stock on Square going into this news? Obviously, part of that 30 million, right? And one thing about short covering or forced liquidation, sometimes there's not volume behind it. Meaning, if something goes up on short covering, once that short covering is done, you got to find more buyers at that high price, or else the thing will fall under its own weight. And
Yep.
short covering is not ongoing demand. It's basically liquidation.
Yep.
And when liquidation is going on, liquidation lasts only so long generally. So
Exactly. So I think, that's the cool thing about options, just so many variations and things you can do. And I think if you get good
Yeah.
at a couple of these things, like you're a master at all of them, and I'm focusing more on the directional, the vertical debit spread we talked
Yeah,
about.
and
then,
you have a systemic way that you're
Yeah.
suggesting to people how to approach them. So obviously,
Yeah.
you can't give them the phone book.
Right. And then on the income side, as you mentioned, the selling, the puts, the vertical
Right.
puts or calls, that's like, the old picking up nickels in front of the steamroller,
Right.
you got to be careful. And
Well, the
then,
big thing about that is if you're going to win, say 90% of the time, just to use a number,
Mhm.
but that other 10% is going to be Nightmare on Elm Street. Well, the key
Right.
is how do you manage that 10%?
Right. Exactly.
And so, obviously, your exit strategy techniques and triggers
Yep.
are really where your entire emphasis should be.
That's exactly it. You have to get out right. Exactly. And then
Yeah.
limit that loss and either
Yeah.
get out early or roll it,
Because,
the
it's
two
not heavy
main ways.
lifting to watch time go by and the
Right.
prices stay above your strike.
And the theta
So, yeah.
helps you there. And
Yeah.
let's talk about iron condors. We were kind of drifting
Yeah.
off track here from the S&P, but these are all fascinating things that give people opportunities, especially small accounts,
Yeah. Let's bring it around to something that you're doing. You using the S&P, and then maybe you can give a theoretical or a real example of what would an iron condor look like.
It's, I'm looking at a couple today, so let me see if I can find one that looks reasonable. So this W is in like just a downtrend, right? So this would be a good one, I would think, to sell a bear call spread on somewhere up here in this area, 335, 340. Short term, weeklies I use. So I think this would be a pretty fair trade. If you come over to W, and if we look at even for this week alone, so come down to the calls. So you can see the volatility is just out of sight here, 130s. So let's say this, if we did an iron condor on this one, let's say we'll do a, let me get this one right here. So we'll sell 340 and then buy the 345. Let's screw down up here just a minute. Sorry. So I get you a little credit, then we'll come over here. That's what I got here. So I got the calls and I got the put size here. This gives you a 50-cent credit. You get a $500 profit with a max loss of 7, which you'd never go that far, So I think the iron condors for the average guy is a good trade, And again, it's just basically 2 vertical spreads, right? So you have to manage the exit on either side of it.
And basically, obviously, you're looking for time to run out, and you want to stay between the 2 strikes.
The theta's on your side. So
Yeah. Again, one of the things about options is, the time decay thing. And obviously in the last 30 to 90 days, the time decay is the most rapid. Using common sense as your guide, the people who are long those options and have not seen the action are much more prone to sell and roll out or sell and get out. And that's what causes the premium to compress. So that's why the shorter term options are the ones where the premium decay is most rapid.
Yep.
That's why when I was talking about Viacom, if you thought there was a big move happening sometime down the road, you definitely don't want to run out of time, and you definitely don't want time decay hitting you that hard right out of the chute.
Yep.
So, yeah, again, that's the 2 basic concept is, when you're buying options, you want to buy time. When you're selling them, you don't want to sell that much time. And clearly a guy who's selling options on a flat market or a market that has already collapsed and giving you 2 years to be correct, I don't think he's getting a very good deal.
Yep.
Because he's going to be sweating for 2 years while you're sweating nothing because you only got $2 in the deal. He's got unlimited risk.
Exactly.
So, yeah, these things are very interesting. These iron condors and stuff, and I don't think people know them and how to employ them. So that would be one very good reason for them to get in contact with you. And you can go over more details than you can in a quick show like this,
Sure. And I think, and again, uncorrelated strategies make sense to me. You don't want to put everything just doing one thing all the time,
Mhm.
So you do directional and you do income. And I think that just makes sense. And I think for people who want to get more complex, you're the man because, you got calendar spread diagonals.
Yeah, I mean, I don't think
broken wing butterflies.
yeah, I don't think you want to
everything
do.
there is, right?
Yeah, I mean, obviously, after decades of doing it, and obviously being trained at a lot of places, I definitely know how they work. The key here is in your situation, what you're trying to do is create a little bit of a menu, a digestible menu of strategies that you think can be repeatable and basically understood. And on my point is that, I like to know all the different strategies, and then I like to look at the circumstances and then employ the right strategy in the right circumstance. You know what I mean?
Exactly.
So, like I say, for the guy who's just out there trying to, make money on a consistent basis, he'd probably like to gravitate to strategies that are somewhat consistent and some obviously understandable.
Yeah, and just to get an edge, and I think the key to this trading game is you have to have something that you understand that matches you, that's compatible with your lifestyle, your risk tolerance, or you work
Right.
at a job,
Right.
all those things. If you don't do that, then you just become a newsletter hopper. You just go from place to place to place, and you just spin your wheels. You just chase your tail. I think I see that all the time. I'm sure you do too.
Well, one of the main things I see is when they just do strategies that they get into and they don't really have an exit plan. And with some of these writing strategies, like I said, if they're going to win 90% of the time or whatever percentage is, maybe it's 70 or 80 or 90%, whatever, that smaller percentage that is the loss, you really got to understand that part more than anything, because that's really where your risk is. Your risk is not if it works. Your risk is when it doesn't work. And when some of these strategies don't work, you obviously have got exposure. So you've got to really, before you get into the trade, go, you know what, I'm going to do it here. And if this such and such happens, either X amount of time goes by, X amount of premium decays, or the market underlying moves a certain amount, A, B, or C happens, I'm gone.
Yeah, you have to have a checklist. You know, I'm a
Yeah.
pilot. I was an airline pilot for many
Yeah.
years. You have to have a checklist, and then in the
Yep.
heat of battle, you don't go off course and crash
No.
in the mountain somewhere.
Because again, you don't want the one flight to be your last flight.
Exactly.
You drug me into the aerospace
Yeah.
analogy, so I said I'll go
Yeah.
there. Let's give
Yeah,
him an
exactly.
analogy there. Well, anyway, we're at the top of the hour, John. So let's make sure that everybody knows how to get a hold of you to get more details on what you bring to the table. Okay.
Great. David, I don't know, you could just put up the tradinggods.net link there if you would. And then if you sign up for the free ebook, that gives you a real good intro to selling options, how that works, what we've been talking about here. And then that also gets you on our mailing list and we can be in touch. And you can also, there's a contact form there, shoot me an email, shoot me a letter, and we can talk and I can answer specific questions. I think, you know, one-on-one is real important. You need to, you know, get to know each other, and you have to trust people. This is your money, you know. And if you look at what's important in life, you know, it's health, family, and money. So we're right there in the big three.
Mhm. All right. And again, take advantage, everybody, of what John brings to the table there. As far as Option Professor, again, we do have the weekly market update, and we do have the paid newsletter where we go over everything from income, growth, international, and speculative investing. And obviously, we bring all of our experience and knowledge to the table. So there's a lot there to add. Go to optionprofessor.com and put in your email, and then you'll start getting details on what we have for you as well. So, John, thanks a lot for being here. I think we went over quite a bit of information here for everybody. So that was a good thing. And David, I'm going to send it back over to you.
Thanks, Prof. Always a pleasure talking to you. I learn a lot from you every time. It's been great. Thank you.
Thanks.
All right, thanks guys. Lots of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. Or you can also just go to TimingResearch.com to get the archive of today's show as soon as I can get it posted, or the archives of any past shows and events. And I want to thank my guests again for today, John Nyaradi of TradingGods.net. Be sure to check out his site. And of course, the Option Professor of OptionProfessor.com. Be sure to go there too. Thanks, everyone.
Thanks, David. Thanks, everyone, for joining us. Take care. Bye-bye.